You are listening to the REI Mastermind Podcast. Join JD as he chats with industry-leading real estate experts and professionals. We learn from their experience and uncover the strategies to their success that we can implement into our own businesses, and we can drive immediate results today. They share their experience and wisdom as we build a foundation to our own success. This is the REI Mastermind Network.
Well, we have Jack Rosenthal on the call here tonight. Jack, I really appreciate your time. First of all, Jack is a young investor. In fact, he's probably done more in his 18 years than some of the real estate investors I've had on the show. Really appreciate your time, Jack, for joining me. And I think we're going to have an interesting conversation here tonight.
Thank you so much. Thank you for having me on. The story, just by the way, of how I'm on the podcast is I reached out to him over email. He was nice enough to have me on, so I'm really appreciative that I'm here tonight.
Yeah, so I appreciate you reaching out. You know, I get a lot of people that ask to be on the show, but I mean, let's face it. I mean, you're a unique one. 18 years old, and not only do you have an investment portfolio, but you even started a Young Investors Club. You can head over to younginvestorsclub.org. And then you can also, Jack has written a few books, and the latest one too for teen entrepreneurship. But you can go to bit.ly/Jack Rosenthal1, and I'll make sure to have those links in the show notes as well. But first of all, I know you're 18 now, but based on writing 3 books and starting a Young Investors Club, something tells me you even started a little sooner than that.
Yeah. I mean, like, I'm 18 now, but it's almost as if I've been in the game now for like 10 years. Like, I'm not even I'm like so used to being the younger one in the room and the younger one in terms of business. Now I feel like I'm older. And something that actually an older friend of mine recently mentioned to me, he's like 22 or something now. He's like, you know, you only got a few more years left of like what you do being impressive when you're young. Like, by the time you reach 22, you know, you've written a book. There's a ton of authors that are 25, 30, 35, ton of real estate investors, 25, 30, 35 stock portfolio owners, et cetera. So I still got that like few years left in the golden zone where, you know, what I do is more impressive because I'm younger. But because I've been doing it for so long now, I've been trading stocks since I was 8 years old. I started the Young Investors Club in my freshman year of high school when I was 14. I've done a ton of other entrepreneurship activities all throughout my life. I'm just so used to it at this point.
Sure. So, you know, you say you started even trading stocks at 8 years old. Like, what got you interested in this? Yeah.
So, I mean, it's 10 years now looking back. It's hard to believe that I've been doing this for a decade. But what originally got me interested is my grandfather set up my first stock market portfolio for me. He gave me a small investment and said, all right, Jack, here's some money. It's your stock account. Do whatever you want with it. He let an 8-year-old, you know, pick his stocks. And I learned a lot of lessons from that. That first year, I actually made a lot of mistakes. But those mistakes helped me with a lot of lessons for the future, which ended up making me a lot of money in the future. Mm. So my grandfather set me up with my first stock portfolio when I was 8 years old.
Sure. So with that being said, are you strictly stock? Is that that type of investing, or do you do any real estate?
Yeah. So for the time being, it's only been stock. I've recently turned 18. I only turned 18 in July. So I've only been an 18-year-old for 6 months now. And, you know, as I'm sure you're a real estate investor, I assume, right?
Yep.
So as I'm sure you're familiar, like a lot of the stuff that's required in real estate, you have to be 18. Like typically for a loan, just to start there, you need to be 18, sure, among many other things. So I've only gotten the real opportunity to be able to do real estate for the past 6 months. So I haven't got a chance to do anything yet, but I'd like to do something in the future, definitely. So sure, for the time being, it's all been stock market portfolio, though.
Oh, yeah, you bet. So with that being said, like talk a little bit about what you've been doing to learn some of these lessons. I mean, I gotta be frank. I mean, a lot of kids your age, unless they have something like the younginvestorsclub.org, I don't see a lot of this type of stuff being taught in school.
Yeah, well, that was a lot of the big reason for me actually creating the Young Investors Club in the first place when I was 14 years old, my freshman year of high school. Keep in mind, when I was 14, I started when I was 8. So I'd already been trading stocks for 6 years. And I was freshman year of high school, and I was like, hey, I want to find some other kids that would be interested in investing alongside me in the stock market. We could both learn from each other. I'd get a great chance to meet some other young investors. It'd be a great thing for everybody. And I went out and I looked for a group that already had that, because I figured there had to be one that existed already. But I really couldn't find a single group that actually invested real money. There was tons of groups that invested fake money. Everyone gets a fake $100,000 and they throw it in stocks and see who has the most at the end of the year. But what ended up typically happening in those groups is people just throw them in risky penny stocks or very risky stocks where it's a big chance they can go up or a big chance they go down. Either way, ton of risk, and there's really no loss. So might as well take on as much risk as possible. But I didn't really feel that simulated real world investing really well. So I decided when I was 14 to create this, essentially a club with the first member, just me, where we would all invest $1,000 each in the stock market and invest it collectively. That freshman year of high school, I went out all outside of my school. I didn't really recruit kids from my school because I kind of wanted to do it outside of school. And if you do it through the school, there's a ton of regulations. Anytime there's money involved, the school is going to want to stick their nose into it. So I did it totally outside of the school. That first year, I got 20 members to sign up, $20,000 portfolio, and then kept managing that, kept growing. I think it grew to, and added on some members plus investment growth. It grew to like about 40,000 by 10th grade. And then 11th grade was the year that I decided, I'm like, I have something cool here. I like what I'm doing. What we're doing is good so far, but I really want to take this to as big as I possibly can. So I said, I want to build the largest teen investing club that invests real money in the country. And I went out and recruited very, very hard that year. My junior year of high school, which for any of you that have teenagers or have recently been a teenager, you'll know that your junior year of high school is also your hardest year academically. But nonetheless, I decided to go out and try and build this club to as large as I possibly could. And after sending out hundreds of emails, dozens and dozens of phone calls, pitching one after another, meetings with parents, etc. By the end of that year, I had over 80 members in the club and over 115,000 in assets in the club, making it the largest teen investing club that I'm aware of today.
Wow. Like I said, everybody, Jack's probably done more before 18 years old than some of us have done in our investment careers. The reason that you particularly is of interest to me is that we have a lot of real estate investors who study this type of investing inside and out, and we have analysis paralysis where these people people just don't want to take that initial action. And at such a young age, do you feel that it's from you're just fearless and you just kind of bold forward, or what caused you to just take the bull by the horns here?
Yeah, I mean, it was definitely fearlessness, and really just wanting to go out and achieve something. That was really what drove me forward.
Sure. So you said you're trying to make the largest young or teen investment club in the country. So have you been able to grow out beyond your initial club?
Yeah, so then I think we took that from 115, kept growing, and I think it's around 130,000 or something in assets at the moment. And that was really a high school club. So I'm a freshman in college now, 18. At the end of my senior year of high school, I decided to pass off the day-to-day operations of the club to a high schooler. Because the whole idea was I wanted a high schooler running the club, more familiar with other high schoolers. And I just felt that it should be something that's run by teenagers. Now that I'm in college, it really wouldn't make sense for me to be that close to the club anymore. So I decided to pass it off to a kid who had been working with me very closely. I recruited him early on. I saw he had a lot of potential. I brought him in. He'd helped me with a lot of the day-to-day work. He did an excellent job. And at the end of that year, he didn't even know I was going to offer this to him. I said, hey, would you like to run the club? And he was very happy to accept the offer. And today he went on and ran the club. So that's pretty much what I did throughout high school in terms of investing. Now where I'm at today is I run my own stock market portfolio. So, I mean, I don't really like to say numbers a lot of time because I feel that it's like bragging. However, I think that a stock market portfolio could really mean a lot of things. If you have $1,000, you technically have a stock market portfolio. And if you have $1 million, you technically have a stock market portfolio. Mm-hmm. So I'm going to give out the number anyway. Today, based on previous entrepreneurship work and my own investment gains, I built a portfolio worth over $100,000 personally at 18 years old, invested in the stock market. And that's a lot of what I do today. As well as I recently wrote some books. Last year, I wrote the Teen Investing book, which has become one of the top-selling books for teen investing on Amazon. And just recently, I wrote these other 2 books, Teen Entrepreneurship and Teen Investing 101, which I hope will do very strong in sales as well, and already are starting to do well.
Yeah, so if you want to check out Jack's book, again, make sure you head over to bit.ly/Jack. And then Rosenthal is spelled Rosenthal and the number 1. So make sure you head over there, and I'll make sure that link is in the show notes. And so are you looking to, I suppose you're out of the day-to-day operations, but are you on the board or something to help guide the club here at this point?
Yeah, so I'm still involved with the club. Really, the hardest part about the club was making it. Running the club is much, much easier. It's quarterly calls that we have, so not a huge commitment to run the club. We have board members of parents that are very experienced in investing, some of whom run large investment companies, and they've really done an excellent job of helping to guide the board. But like I like to say, there's probably only one kid who could have started and gone through all the hurdles in order to create a club like that, and it's me, and maybe a few other kids could have done it, but very few people could have could have had all the hustle and the grit in order to really push through the wall and recruit that many members in the first place. Now that it's in operation, it's much easier to run. So yeah, I'm still an advisor to the current people who are running it, but they really handle a lot of the day-to-day now.
Sure. So if somebody was across the country from you here now and they wanted to start up an offshoot, like how would they start or go about getting some more information on that?
Yeah, it's funny you mentioned that. I included my email at the end of my first book, Teen Investing. And a kid actually read my book, I think from California, across the country. And he wanted to know how he could go about starting his own investment club. So I'll tell you right now the same thing I told him. So the key is recruiting members. Typically, you can start with your friends. And you can most importantly do what I did, which is partner with an organization. That's the fastest way to get out members. You only know so many people. Your personal network, especially when you're 14 years old, is only going to be so big of kids that can actually put $1,000 in the stock market. Mm-hmm. However, what I did was I partnered with a much larger organization who I knew had a ton of parents in it. And I said, hey, would you mind if we use your email list to basically put out this message and see if people would be interested in joining? It was a great win for them because this was like a new kind of benefit they could offer their members. And it was obviously a great win for me because I got a lot of exposure from it. So the number one thing I would say is go partner with a parent network of some sort, whether it's like maybe it's a chamber of commerce and there's a ton of business owners / parents in it. Maybe it's some kind of thing that's related to the school but not directly dealing with the school. Anytime there's like a big parent network and you get access to their email list, that's the best way to create the club.
Sure. Well, let's change focus on this just a hair. We're talking to essentially parents right now. You're talking to people that are in the investment game on some level, but they likely, a lot of us have kids. So if they would hand this video or audio podcast over to their kid, like what is some of the advice that you would give them starting off? Like what would you wish you would have known at the very beginning?
This is an interesting this is an interesting question, and I'll say the number one thing that I recommend for kids is you want to try and earn as much money as possible. I know it sounds very obvious. However, a lot of kids try and start a stock market portfolio with too little money. Mm-hmm. Say you have $100. Even if you make a 10% return on that, you're only making $10. And even if you're a kid, that's not going to get anybody excited. $10 is the cost of lunch. So the biggest thing I'd say when you're a teenager is you really need to focus on earning the money first, whether it's working at a local restaurant of some sort, or starting your own kind of business and just starting to build up a few $1,000s, I recommend you should try and get to $5,000 saved up, which is not that actually hard. You can go work a summer job. You can be a caddy. You can work in a restaurant. If you're willing to put in the time, there's plenty of jobs where if you work long enough, you can earn that amount of money, especially throughout 4 years of high school, or if you're starting middle school even earlier. So the number one thing I recommend is you first have to earn the money, and then you can read people like mine books and check out a bunch of online information about how to invest. Then you can go out and actually invest the money in the stock market or one day in real estate.
Sure. Do you recommend that they use phone apps like Robinhood and Webull and a few of those type of things? Is that a easy way for kids to kind of get started?
Yeah. So, I mean, I'll tell you from college, a lot of kids in college, it didn't happen so much in high school, but now a lot of kids in college, especially because I go to a business college, a lot of them use those trading apps like Robinhood and many others to trade. I personally use Fidelity. No particular reason why I chose that one other than my grandpa chose that one for me when I was 8 years old. They've been flawless. I haven't had any problems with them. Definitely not like the most like visually appealing platform. Like it doesn't make it all fun and exciting like Robinhood. Apparently with Robinhood, if you click a trade, it like sends up some balloons or something right after you trade.
Right. It's almost gamified to a certain extent.
Exactly. So those apps are good if you're kind of trying to make it a little more of a game, but really doesn't matter the app. It just really matters the underlying investment that you're making and how much money you're putting into it.
So like you mentioned, reading your book and maybe getting some information online, but talk a little bit about like that initial investment. They got let's say they work all summer and they do collect the $5,000. What do they do with it?
All right, so perfect. Now you got your 5K. You're all set. Here's how I would recommend investing it. So if you don't want to take the time to really look at stocks, which I'd say is at least half of kids, instead of putting in a bank account where you're going to earn basically nothing, as all the real estate investors are taking advantage of that with the low interest rates they're getting on their loans. But the con side to that is you leave money in the bank, you get paid basically nothing on it. Is just take it and throw it in the S&P 500 index. Earn your steady 8 to 10% return a year. Passively invest. You literally don't even have to look at the investment account, and you're on average going to make about 8 to 10%, or that's what it's made over the past 50 years. Which, by the way, is a better return than some investors make in real estate, and they have to do a ton of work in order to do that. And this, you don't have to do anything. So the very first thing I'd say is if you're not interested in like really picking stocks and really putting a lot of work into it, throw it all in the S&P. If you're looking to do some work and some research, I would definitely follow the news. Look at active stocks. Like for example, if you got in early on that whole GameStop thing, you could have made a killing. I personally didn't, but that's like one example. Follow along in the news. See if there's like quick little arbitrages you can do to make some quick money here and there. Look for long-term stocks that you believe in. So, like, for example, one of my favorite stocks, I'll throw out a little stock pick here. One of my favorite stocks has always been Berkshire Hathaway. Big fan of the company. It's one of the few stocks that's actually performed better than the S&P 500 on average for over 50 years. Year-over-year returns have been higher. So I think it's pretty reasonable to assume that they can also be higher for the next 50 years. So because you're a young investor, you have such a long time horizon, look for companies that you think are most likely to be around in the next 20, 30 years. Just buy and hold those companies. Don't try and day trade. If you want to learn day trading, I'm not your guy, but I know about passive long-term investing, and I'd say one, either throw it in the S&P if you're just not really looking to do a lot of research, or if you are looking to do some research, buy companies that you think are for sure going to be here in 20, 30, 40 years.
Yeah. So, I think it's interesting that you point out the day trading. I think a lot of people, when they get into investing the stock market, it's they jump in, they get excited. The GameStop thing, for example, that was the most recent situation where a lot of people jumped in. And then there's a lot of panic selling and a lot of it's driven by emotion more than anything else.
Yeah, it's really interesting how assets are now valued. Like we're living in this whole new world where partially because of inflation, where it makes more sense for people to just own assets, period, at any price than to just keep their money in cash, but also partly because it's been gamified, apps like Robinhood and the younger generation now starting to get involved in investing. I don't think there was levels ever this high of young people getting involved in investing ever. And especially as those young people get older, start to accumulate more wealth and they have more money to invest, it just gets more and more gamified. And you see some of these companies where there's no real basis that these investors have for investing in these stocks other than, the stock will just keep going up because it's been kept going up. But they're not looking at PE ratios. They're not looking at the earnings. They're not really caring about anything. They're just like, Tesla, that's a cool car. I think I should buy their stock. So yeah, you definitely do see a lot of that. I think that's going to continue for the future, definitely.
Sure. So, you kind of took a small jab at real estate investors there. So, my listeners,
I saw your facial expression there.
My listeners aren't going to let me just let that go.
Yep.
So for those young people that are listening, the reason that you'd consider real estate investing is something that Jack, maybe you don't know that, we have 4 profit centers compared to the stock market. So you would get into real estate investing and 5,000 actually could start a rental portfolio or something, depending on the situation there. But anyway, you would have appreciation associated with the property, depreciation schedule that can be applied to your taxes, as well as the returns on the investment. And then you also have the amortization, which is another aspect of the bank loan that's on your side. So you can look into my past episodes to dig into that a little deeper.
I knew you weren't going to be happy about the real estate comment. Well, first of all, I would say, listen, reasonable minds can differ. However, I'd say 2 things. One, for younger people, very difficult to get involved in real estate if they don't have a parent helping them do a lot of work. And a lot of times the parents are like, hey, I got a job. I can't do everything for you. And it really requires the parents to do a lot. So that's the first thing. And then the second thing is places where I live, like New York. Like if you try and buy real estate there, the cap rates are so low and so ridiculous. Even getting good debt on it, you still might not be able to clear a higher return than you can make in the S&P. So for those 2 reasons, for some investors, depending on where you live and how old you are, it might make more sense to put the money in the stock market for the time being. And then later, once you build up more wealth and have more money to invest total or want to go somewhere else to buy real estate, then it can make sense.
No, that's a very valid point.
Thank you.
So what I think is one of the more interesting aspects of your story, I really, it's impressive that you've built your investment portfolio, well, twice over now. You did it once with your teenage group in your club, and now you're doing it again in college. But the mindset associated with this, I keep coming back to this concept of you being frankly fearless and figuring this out. Was this is just a natural thing for you, or is this something that you have to constantly work on?
Can you define the question a little more clearly? Like when you say fearless, like how would you define that? Like maybe make it more specific, just so I can.
Well, the mind. There's a deliberate, like in my case, and why I'm so fascinated about this is that I really have to work and keep my motivation up and keep my mindset in the right place. So I'm constantly listening to audiobooks. I'm constantly listening to podcasts. But I've run into these rare people that just seem to naturally have that level of motivation without that exterior motivation, if you will.
Yeah. I would say the biggest thing is really that goal. I mean, you set a goal and then you just do everything in your power in order to try and get to that goal. And I'd say, I think it maybe works. Different people's brains work differently. For other people need like motivation every single day. I'm not saying I don't need a little motivation here and there, but I would say that, like, for example, the Young Investors Club, once I set the goal that I wanted to make that club the largest teen investing club, I was just wanted to make sure that I did everything possible in order to try and achieve that goal. I might have failed. I understood that year when I went out to try and do it, there was a chance I could do all this and it might fail. But I just wanted to make sure that I turned over every rock. And if, for example, if there's 100 people that were possible decision makers, I wanted to make sure I emailed every single one of them and tried to call every single one of them. Or if there's 1,000 people, I want to do the exact same thing with all those people. It's really just about hitting a goal and then figuring out everything you need to do, everything possible you could try and do to try and achieve that goal, and then doing every single one of those things. Because either way, whether you hit the goal or don't, at least you tried everything that, you at least turned over every rock.
Yeah. So what Jack is talking about here, I just recently released an episode 124 with Rod, or 224 with Rod Cleef. And Rod Cleef is an expert when it comes to multifamily investing. But we spent the entire episode talking about goal setting and how to essentially motivate yourself to take this level of action. So I'd encourage people to check that episode out. It was fantastic. But, I believe it or not, in a blink of an eye, we've spent 30 minutes. I feel like we could just keep going. That being said, I usually try to end the episode with one quick question. Was there a question you wished I would have asked you here today?
And
I usually get that expression actually, like, oh God, I can't believe he's asking me this.
Yeah. I guess it's all queued up. I'm trying to think if I don't know one. I guess that's like another way of asking people, hey, what's one more thing you want to talk about indirectly? The question they want to be asked is something they want to talk about.
In a way, yeah.
No, I would just say that, I guess, what inspired you to write the book? That's definitely a question that I've been asked on podcasts before. Sure. What inspired me to write the book is just as I was kind of wrapping up the Young Investors Club, wrapping up that venture, that club, at the end of my senior year of high school, I decided to write this book, basically kind of going over all my teachings of what I've taught, because I basically became like a mentor to 80 different kids. Most of them didn't know as much about stock market investing as I did, so I was teaching them continuously on all these calls. And I decided to compile a book of information, just kind of like, it was originally not even going to be a book. It was going to be like a booklet, like, oh, here's all the top lessons I've learned from the Young Investors Club that I pass on to you guys. And I was going to hand it out to basically everyone in the club as like a goodbye present, like, hey, thanks for signing up for the club. Really appreciate having you. Here's a book to remember it all. And that's really what inspired me to write the book. And then all of a sudden I realized, hey, wait a minute, this information wouldn't just apply to people in the club, but it would also apply to really any young teenager interested in getting involved in investing. Mm-hmm. So I decided to make the book available on Amazon, and surprisingly, I didn't think it was going to do well. Surprisingly, it did very well. I think that the idea of it being written by a teenager, there's tons of teen investing books, but many of them are written by teenagers themselves, and a teenager who's ran a club with actually investing over $100,000 in real money, I think gave the book a lot of credibility, and I think that contributed to its success.
So, no, that's just awesome. Like I said early on, you've done more in your 18 years than a lot of us have done. And I really appreciate your time. Again, more information, just as a template, if you will, Young Investors Club, LLC. That's at younginvestorsclub.org. But more importantly, if you have a teenager, I would definitely and strongly recommend you check out Jack's book. Head over to bit.ly/Jack Rosenthal 1. And I'll make sure to include that link in the show notes because I know Bitly links sometimes can get a little tricky. You got to make sure you capitalize the J and capitalize the R. But we'll make sure those links are there. Really appreciate your time. Thanks for reaching out.
Yeah, thank you so much for having me on. Hope this gave a lot of value to your listeners.
Yeah, I think it was great to have a unique conversation like this. It's good to, one of those things that I think is really especially important is that we get so focused on real estate investing. We need to have we have to consider other options. So I appreciate it. And I think we have to, as older investors, I'm trying to build something for my kids and trying to get them involved in some way. And this is a prime opportunity to do that.
Thank you so much.
This has been the REI Mastermind Network. You can already tell that we've made some changes, and a few more are on the way. If you are interested in what we have planned, head over to patreon.com/REI Mastermind and support the show today. Financial contributions are always appreciated, along with a like, share, and review. It really helps us grow and reach more people with this valuable information. See you next time, and tell a friend.